Have you ever Googled your own name? Prepare for a shock because your personal info, including addresses and phone numbers, is all out there. It's all harvested by data brokers and sold legally. Aura is a personal digital security service that scans the internet for your sensitive information and provides a full suite of privacy-enhancing tools. For a limited time, Aura is offering listeners a 14-day free trial at aura.com/safety. That's AURA.com/safety to learn more and activate the 14-day trial period.
Molly loves associating asset classes with different types of shoes. So she says your cash is like your flats, bonds is like your winter boot with a small heel, property is like your platform, and then stilettos is shares. Look great. Hopefully you can pull it off. If you do, it's going to be fabulous. High chance you might twist an ankle.
G'day and welcome back. Or if this is your first time, welcome to Shares for Beginners. Today I'm chatting with one of the founders, advocates, coaches and fashionistas of the Ladies Finance Club, Betsy Westcott. G'day Betsy, how's it going?
Hi Phil, I'm very well and thank you for having me.
That's okay. You said this was your third podcast or?
This is my third one, so I don't think that makes me an expert. I think it makes me still very much a novice.
Now the Ladies Finance Club is on a mission to change the way women think about and behave with money. They want women to feel confident and fearless about talking money, budgets, retirement and investing. And before you flick next, guys, all this applies to men as well, doesn't it?
Yes. We have you let me know if this isn't okay to say, but whilst we're a ladies' finance club, dicks allowed, just no dickheads.
Fantastic. Okay, so tell me about starting this club.
Yeah, so it started in 2018 with my co-founder, Molly. She was in London at the time, living with some girlfriends in a share house, and it was Sunday evening. They were all talking about their weekend, comparing, dating apps, which is better, Tinder, Hinge, Happen. I'm told it's Hinge. And they were kind of lamenting about how broke they were, sort of chatting to each other. They were well-educated, reasonably well paid. They'd been working for a number of years, but they just weren't really getting ahead with their money. And Molly was working in finance at the time, and she thought, I'm going to talk to the finance chicks at work because, they'll be on top of this. And so she went into work, and she was in events, and she was chatting to some of the other ladies there. And, much to her surprise, she found that, nope, they weren't that much better either. And there was this sort of predicament that a lot of women her age were facing, where that, we earn good money, but we're not quite sure what to do with it. And so she thought, okay, something has to change. So she started hosting events in her lounge room, and then quickly outgrew the lounge room, and then began hosting these events. So
that's quite a jump, isn't it? It's going from going, I've got to do something about this, and then we'll make it into an event.
Yeah, well, why not? I mean, the thing is, chuck finance into Google Images and you get a sea of charts, lots of very serious people in business suits. And
it's a problem, isn't it? Yeah.
Yeah, and a lot of blue. And you know what? Like, the real theme of Ladies Finance Club is, first of all, empowerment, but second of all, fun. I mean, why not? We always have Prosecco or champagne, Giddy-up. But, we talk about finance in a way that makes it relatable, makes it engaging, but we never dumb it down because, women are smart. They don't need it to be dumbed down, but they just need it to be spoken to them in a way that actually resonates. So, yes, Ladies Finance Club was born, and we brought it back here to Australia in August. Since then, it's been such a wild ride. We've had events here in Sydney, Melbourne, Brisbane, and we've got one coming up in Townsville in November.
And Brisbane, you've just come back from Brisbane, and that was a really successful event, wasn't it?
It absolutely was. We were just blown away by the level of engagement. Like, we literally had to bring in extra chairs so that we could fit everyone in, which is a great problem to have. But I just think, it's an environment that's really safe, it's really fun, and we really focus on giving women practical tools. So, come along to a investing event or come along to a finance event. So what? What are you going to do next? And so our focus is always that we want to make sure that our guests, our attendees have something that they can go away with and implement that night. They can do one thing to just really start changing their future.
And so you find there is a thirst for this kind of knowledge amongst women, because I think there's a lot of women. I mean, I think of my daughter as well, and I'm trying to get her interested in this, and her eyes glaze over this. But I guess part of it is they're looking after the women who want to find out more information, and then there's the women who are kind of a bit in denial as well.
Yeah, I mean, so many things I could say on that. First of all, I would say, it's not so long ago, less than 2 generations ago, that a woman couldn't own a bank account in her own name. She couldn't buy a house. She had to give up her job once she got married. So, it's little wonder that we're all still kind of finding our feet when it comes to this whole money business. What we find is women are very good at managing like the household finances, but it's taking that next step from being a saver and being frugal and thrifty to actually growing your wealth. And, we're really trying to change the messaging around that. And then, I think the second thing is that women do want to know about this, but they don't want to be, taken into a stiff room, sit across from a bloke and him just mansplain the whole thing to her and talk about bulls and bears and, buying low, selling high and all that kind of crap. For women, what resonates with us, and what resonates with a lot of people, it's not just women.
And men as well.
Is goals, because you're not growing wealth just so you can look at the bank account and be like Daffy Duck swimming in a sea of money. I mean, for some people that's exciting, but really creating wealth is all about what can it do for you. And, in my world as a financial coach, for me, it's all about financial well-being. And what does that look like? That means that you have choices and the freedom to live a life of your own terms, whatever that looks like for you, because personal finance is just that. It's personal. And it's going to be different for everyone.
Okay, well, let's get down to the nuts and bolts.
Yeah.
What are the foundational concepts that you need to understand when investing?
So we kind of think there's about 8 financial concepts. So the first one is compound returns, one of my favorites. And this is why you invest, because compound returns is all about when your money starts making money. So just like you go to work every day and you get paid for it, this is starting to leverage your money so that it starts earning its own income and then can start growing. So that's why you invest. We then sort of take people through asset classes. So this is what you can invest in. And we tend to focus on the 4 major ones. So, cash, which everyone knows, money in the bank, money under your mattress, wherever you keep it. You've got your bonds, property, and shares. When I was first starting out, little confession, I used to get really muddled between what bonds and shares were. So I used to use a rhyme to remind myself, and I hope I'm not alone in this muddledness, but I used to remind myself, shares you're an owner, bonds you're a loaner, as just a way to kind of remind me which is what. So then we look at risk and return.
Just before we get on to risk,
yeah.
What is the importance of asset allocation?
Yeah, well, each asset class has different attributes. When you're investing, you're wanting to generate a return, which is what you get back for putting your money away. And different asset classes have a different level of return that they pay you and different types. So a return can be income, or it can be growth. So income is things like interest, rent for commercial property or a property, and if it's in a share, it's a dividend when you get a share of the profit. And then property and shares have also the opportunity to change in value. So growth is when it goes up in value. Everyone likes that. But they also have the possibility of going down in value, which is a capital loss.
Okay, so talk more about the risk.
Yeah, so risk. Risk is where you don't get back what you expected. So risk and returns go together. They're kind of like peas and carrots. If I was Forrest Gump, I would say risk returns are like peas and carrots. So when you've got low risk, you've got lower returns. When you've got higher risk, you've got higher returns. Therefore, so if you think about cash being your safest asset, that's low risk. There's a low probability that you won't get back what you put in, but conversely, there's low returns. And as you move up the sort of the risk scale into bonds, slightly higher returns, property slightly higher again, shares with your high risk, but also high return possibility. So then we talk to our ladies about inflation, a term that's, often talked about but not always well understood. So we explain to them that inflation is the rate at which prices change. And why that's important is if you're someone who's like, you know what, I don't like the sound of this risk business, I'm just going to keep it in cash and it's going to be nice and safe and there's no way I could lose any money there. Well, unfortunately, with the rate at which prices are changing, they're actually changing at a rate much higher than you're earning on your cash. So what that means is if you have cash sitting in the bank today, it's not going to have the same buying power tomorrow. So again, it's a really good illustration of why now more than ever it's really important to be investing your money to be sort of countering the effect of inflation.
Is that something that you find that a lot of people just want to have complete safety?
What I find is that the dream of owning a home is very strong and very compelling here in Australia. And I think for young people, a lot of the ways that they assume they get to that is by saving cash, then buying a house. And that's your path to wealth creation. And that's a path. But, you know, along the way, it takes a long time to save up that property deposit. I mean, we know what the price of houses are here in Sydney. So, you know, if it's going to take you, you know, sort of 5 years to save up that deposit, then maybe consider investing along the way to help accelerate your path to reaching that deposit goal.
Okay, let's go on to the next one.
Risk profile. That's a really important one for people to understand because...
so this is a personal profile, how you feel about risk, is that right?
Yeah. So it's basically, you think about your investment in terms of the time frame that you have between when you want to put that money away and when you eventually want to spend it. And then you think about what level of risk you're willing to take to achieve that goal. And that helps drive what sort of blend of assets you should invest in. So it's the balance between the return you want to generate, the risk you're willing to take, and the time you have in which to get there.
And the more time you have, the more risk you want to take.
Absolutely. And also, as you know,
sorry, that's risk in a general term. We don't want to just put
it all on black.
That's exactly it.
And also, like, it reflects your level of confidence. So, you know, I've been investing for about 10 years now. I feel quite confident that, you know, I have a reasonable idea of what I'm doing. Whereas I was literally chatting to my younger brother the other day about getting started on investing. Good on you, Macca. Because it's his first foray into investing, I was like, start conservative, and then as you get more confident, take on a little bit more risk or move into riskier assets. So confidence also plays a big role in where you allocate your investment.
Okay, where are we up to in the fundamental concepts?
We're almost through, so we're going to talk about asset allocation and then my favourite, number 8, diversification. So you figured out your risk profile, you know how long you've got, you know what level of risk you want to take on, and then you allocate your money across the different asset classes in a way that reflects the level of risk you're wanting to take with the return you're hoping to generate.
Have you ever Googled your own name? Prepare for a shock because your personal info, including addresses and phone numbers, is all out there. It's all harvested by data brokers and sold legally. Aura is a personal digital security service that scans the internet for your sensitive information and provides a full suite of privacy-enhancing tools. For a limited time, Aura is offering listeners a 14-day free trial at aura.com/safety. That's AURA.com/safety to learn more and activate the 14-day trial period.
Diversification is a risk mitigation strategy. So I think the fear on a really simple level is that you have $10,000 and you invest it in one company and then that company goes broke and you lose all your money. That's your like worst case scenario. And that's kind of like putting all your eggs in the one basket. Now you don't want to do that. You want to spread your eggs around across maybe tens of things to hundreds of things to even thousands of things, because the probability then of all those thousands of things going broke and busting and you losing your money is very, very low. So diversification is spreading your investment money around across asset classes, so not just shares, but bonds, property, cash, and then, you know, spreading it around geographically, spreading the time.
So the shares are international shares or in emerging markets.
Yeah. And then also looking at, you know, where do you want to invest? You know, different fund managers, different types of investment. So there's lots of ways to diversify. And yes, it does go beyond just buying a handful of different shares in different sectors.
And that's right. And then bringing it back to the share market is that you can actually get diversification by buying either funds or ETFs or LICs.
Yes. They're a
Off the
wonderful
market.
tool. Yes,
Yeah.
they're a wonderful tool for diversification. And
You don't need to leave the share market at all.
No,
to get
and
this
you get
diversification.
that. And
Yeah.
also, you don't have to be an expert, because I think the difference between buying direct or buying a fund is, you're going to get that diversification and good exposure to a good sample of assets or good sample of different shares. But you don't have to be the expert picking it, because, I'll tell you what, Phil, I'm not sure which Japanese bank is the one that I should be buying, or which German pharmaceutical, or, is ANZ better than CBA? I don't know. I'm going to leave that up to the experts. I'm going to leave that up to the market, and just take a good solid sample of things is my preference.
Okay, so this one's for your brother Macca.
Macca.
How easy is it to get started?
Yeah, so there's three approaches. I'm going to say one thing. Before you get started, pay off any high interest debts you might have. So I'm thinking afterpays, credit card debt, personal loan, and make sure you build up your emergency savings. So that's 3 to 6 months worth of expenses, because you just want to make sure you're safe and you've got the cash available to get yourself out of a tight spot. Some people call it emergency savings. I think the Barefoot Investor calls it the Mojo Fund. I like to call it my F-off fund. Whatever you want to call it, make sure you have that, because that's your safety net. And then, yes, start thinking about your goals before you get busy buying stuff. Why are you investing? What is it you want to achieve? How long can you put this money away for? And what do you eventually want to spend it on? So even if it's like retirement and your super fund, eventually you're going to want to spend that. So what's that time frame? Or is it something shorter like education?
Okay, so you've paid off the credit card debts, you've got yourself your F-off money,
Yeah.
and it's time to invest. So where do you start?
Yeah, so we've started with your goals. You've got your short, medium, long-term goals, your needs and wants, and you've worked out how much money you need to get there for all of those and how long you've got to invest. Now you can get started on investing, because you've got a really clear plan on where you should be putting your money. So I think there's three main ways to get started investing. You can go direct, you can look at buying a fund, or you can go and get advice from either a robo-advisor or a financial advisor. So going direct, that's when you buy directly shares in a company, you go buy a bond, you might buy a house, and that means you own it in your own name. Now, that's a great way to go. No dramas there. It is difficult to achieve that diversification when you're going direct. So, picking stocks, as we were saying earlier, like picking a German pharmaceutical and a Japanese bank, or, Facebook, or should you go ANZ, who knows, there's only so many of those you can buy, particularly if you're starting out and you've only got, a couple of $1,000s or something. To get that diversification is pretty hard. We know what property houses cost here in Australia, so getting diversification across property could be difficult. And a bond usually starts at about $500,000 to buy one directly. So direct is going to be a bit tricky, not impossible, but tricky to achieve diversification. So your second approach is to look at funds. Now, you've got your managed funds, you've got your exchange-traded funds, which I know you've talked about a lot in the podcast, and you've also got your listed investment companies. You can go direct to a fund manager who is a professional investor, and they'll pool your money with lots of other people and invest it across lots of different things. And you can go, direct for a specific asset class, or you can do like a blended portfolio, like a balanced portfolio or a high growth portfolio. And depending on your risk profile and the returns you want to get will depend on which type of portfolio you buy. That one's really good if you were trying to separate money for different goals. So you might have like a 5-year goal and a 15-year goal. Spreading them into different portfolios is a good way to keep it separate and keep it on track for what you're trying to achieve. So then you've got ETFs, your exchange traded funds. So that's buying a sample of what's on the market. So again, you can buy asset class ETFs, a bond ETF, property ETF. Or you can buy an index, which is a sample of everything in the market. So maybe like ASX 200. It's a sample of all the different shares that are in the top 200 shares of the Australian market. And then you've got your listed investment companies. Sorry, I'll say that again. Listed investment companies.
LICs.
Yes, LICs.
Just call them LICs from now on.
Yeah, stuck with that. Anyway, thanks, Phil. So you got your LICs, which is buying a share in a company which invests across lots of things. So you don't have an exposure to that share. You basically own a share in that company and get a return based on how well the company's performed. So there are 3 options. But if you're someone who's like, I don't really know what my goals are, or, I'm
Most of us.
Yeah.
Let's face it.
Yeah. Or, you're like, I'm not really sure how to identify my risk portfolio, things like that. Or if you're someone who's like, I would really like to start investing, but I can't seem to get past my first $1,000. Every time I do, I self-sabotage. Then chatting to a financial advisor or seeking help from a robo-advisor is a really good way to go. A robo-advisor is going to be a lot lower cost. It's a platform or an application where you go online, state what your goals are. They'll help assign a risk profile for you. And
they'll give you a questionnaire, won't
That's
they, just to
right.
work out exactly
Yeah.
what your risk is, which is a good process to go through. Just to make it clear, well, what is risk? What is my risk profile?
Absolutely.
I've got no idea.
Yeah. Oh, and oh my gosh, if you haven't, check out ASIC's Money Smart. Like, it is my all-time favorite website.
That's right.
But it's amazing because it's government provided, so there's no one there trying to sell you something, and it gives you all these great tools to get started investing, and just really breaks down a lot of the concepts. So check that out.
Yeah, no, we should, because another guest a while ago mentioned that, and I haven't come back to it because I really wanted to do something about Money Smart website and what a great website it is for.
It's brilliant.
It is. It's fantastic.
I love it. Honestly, it's such a great resource. They've got guides on there like what you should do to financially prepare for buying a puppy. I mean, most of us wouldn't think about that, but actually buying a dog costs a lot. So anyway, it's a wonderful resource. Or you can go see a financial advisor who will, really talk through your behaviors, your goals. They'll also help you if you're like, I'm not sure if I should be investing or paying off my mortgage, which is going to be better, and they'll help you work out those things. So,
but aren't they a bit more costly? Like if you've only got a couple of $1,000, it's not going to be worthwhile to go and see a human?
I agree. Look, they are a bit more costly. I think, sort of $3,000 plus will be your statement of advice fee, because it's really expensive to provide that personalised
That's a lot of work,
advice.
isn't it? Yeah.
Yeah. So look, I think when you're starting out, if you can invest some time in educating yourself, listening to great podcasts like Shares for Beginners, going to Ladies Finance Club, things like that, going to ASIC's Money Smart, and spend the time, looking at your goals, understanding different asset classes, you can really get started with just a little bit of money and start seeing some great results.
Okay, so you've decided about what kind of advice you want to get, and you're going through the learning experience. What's the next step that you would take in your journey?
Yeah, so you've started investing. It's the final step, which is stay close to your money. Do not set and forget. So, keep really good records of what you've invested in. Watch your investments to make sure they're performing where you think they should be. If you have invested directly or set up your own investment in like different asset funds, you might want to rebalance your portfolio to back to your risk profile as it goes along. Although if you've gone with a robo-advisor or a portfolio or with a financial advisor, they'll do that for you. And then keep good tax records, because you'll need to report to your accountant what you've been up to with your investments. So that's it.
So tell me about some of the stories that you've heard from. Obviously, you'd be taking questions from the floor.
Yeah.
What are some of the issues that you've been dealing with?
I think, first of all, it's a lot of confidence issues, particularly for women. I think, a lot of feelings around, I'm just not great with money. I don't know where to get started. Oh, that's all too complicated. I'm just going to wait till I get married. Particularly for women, like for most of us, we're working 10 years before we may settle down, if we settle down. That's a long time, and that's a lot of lost sort of earning potential, growth potential, if you're not making your money work for you through investments during that time. And the second thing is that money's not that complicated.
It's not that hard, is it, once you learn about it?
No. Contrary to what the financial industry would have us believe, it's not that complicated. If you got through primary school math, you can understand the foundations of finance, the foundations of investing. And it's absolutely within your control to, become financially well.
And I think it's been part of the industry as well that they've kept it a bit complicated.
Oh, it suits them too.
It suits them too, doesn't it?
Because it keeps everyone in jobs and making lots of money and so forth. So, I'm big fans of people like Scott Pape, the Barefoot Investor. I love, like I've said, ASIC's Money Smart website, and, Mel Brown with her Un-F Your Finances book, things like that. People who are out there sharing information, educating people on how you can have really healthy money habits and grow your wealth safely, and just demonstrating how simple it actually is. And the thing is, it's about starting, doing something and doing it consistently over time.
And learning as well. Just keep learning. Yeah.
I'm still learning. I've been in the industry for like 10 plus years and I learn new things all the time. So, continue to educate yourself. And also, make money fun is my one piece of advice, because no one wants to do chores. Chores are boring. So like whenever I'm checking in with my money, I pour myself a glass of wine, I put on my favorite beats, and then I get stuck in. And if if it's something around like budgeting or saving for something, or, if my investments have been doing well, I'm watching my super fund grow, like I pick a small way to reward myself, because good on me for having good money habits. And yes, I will reward myself with like a massage or get my nails done, or even just something as simple as an ice cream, because who doesn't love ice cream? So, make it fun. Associate it with good things. Don't associate it with pain and boring and all that kind of chore stuff.
And it's also much easier to start these days as well. What are some of your favourite tools for starting and getting investing? I mean, we briefly touched on robo-advice.
Yeah. So there's great robo-advice out there. And I wish I had had that option when I was starting out. I had to go to a financial advisor and pay some good money to just get into a fund. Whereas I could have gone to a robo-advisor, had all of that advice and done it for a fraction of the cost. There's StockSpot here in Australia. There's also Six Park, which is a Melbourne-based one. Log on online.
We've had Ted Richards from Six Park on the
the
podcast.
Yeah. Fabulous. Yeah. So,
friend of the podcast.
Of the podcast. G'day, Ted. I've just done an interview with them, so very excited about that. So those are really great ways to get started. You can use apps like Raise, where it rounds up a little bit of every purchase. So if you're buying a cup of coffee, $3.50.
It's an enforced saving, isn't it? Yeah.
It's enforced savings. Yes.
You buy that coffee and it gets.
And then and once that gets to a certain amount, they'll go and invest it in a fund for you. I'm all about systemizing my money because I'm innately a lazy person. So,
who isn't?
Yeah. So if I can find tools that make it easy for me to save money, I love them. I love using Spaceship, which is another investing app.
Yeah, you showed me Spaceship the other day. Yeah. That's an interesting one.
Yeah. So that one's probably a little bit more high risk in terms of the composition of the investment.
So only allocate a small amount to this one?
I put a small amount in that one. I put like a little bit of fun money in there. But I love it because I can contribute to it every month with my own little investing plan, and I can dial that up and down. So every month I put $100 in there. It's on my phone. So I love just checking it and seeing what the market did that day. And it shows me every share I own. And then it has really great stories about, what's happening in the market, or, different saving stories and interviews with different customers. But on the shares one, when you click on it, it shows you, what the share price is, why they like it.
These are tech stocks, aren't they?
These are tech stocks in that
one. And are they
one,
Australian and US or around the world?
Yeah, around the world. Yeah. So you've got Aussie, like in that particular one, there's like Aussie stocks like Afterpay and Zip Money and things like that. But then you've got Google and Facebook and Tesla and all these different things. So just quietly, that's not advice to go and buy it, but this is just a tool I use and I really
Amongst
enjoy.
many tools that we're just talking about.
Many tools. Absolutely. So so there's so much out there to get started. And I would say just start with a little bit. You can get going with like a couple $100, literally. It's amazing.
So you like your analogies, don't you?
Yes,
you like to explain finance and how easy it is with some analogies.
Yeah. So when we're doing our Ladies Finance Club, I'm up there explaining diversification, and Molly, who's such a divine character, juts in and she's like, so Betsy, is like diversification like instead of putting your eggs in one basket, put it in many baskets, or instead of dating just one guy, date many guys? And then we're like, yeah, kind of the same thing. We've got this great lady called Rachel O'Connor from Florex Wealth who speaks to us at our events, and she explains, direct investing versus funds versus getting advice as like different ways to bake a cake. So going direct, it's like putting on a blindfold and going to the pantry and pulling out some ingredients and just mixing it up and chucking it in the oven and hoping you get a cake. You might. Chances are you won't. She explains like investing in funds is like having a recipe, and you buy all the ingredients and you mix it up and you're probably going to get a cake, but there's a chance things could still go wrong, versus getting advice is like your Betty Crocker mix. So, you know, we like to...
Off the shelf.
Off the shelf, exactly. we like to use different scenarios. Molly loves associating asset classes with different types of shoes. So she says your cash is like your flats. Bonds is like your winter boot with a small heel. You've got property is like your platform, and then stilettos is shares. Look great. Hopefully you can pull it off. If you do, it's going to be fabulous. High chance you might twist an ankle.
What have you personally gotten out of your journey with the Ladies Finance Club? What's it meant for you?
It brings me so much joy. I love being able to help people understand money and do more with it. So if I may indulge in a bit of a story which will give some context to why I am the way I am. So I grew up on a farm initially, and so, you know, I learnt from a young age that you need to always put something away for, in farming terms, not so rainy days, such as drought. So I sort of grew up learning that. And then my parents separated, and my mum and my two brothers and I moved to Townsville. And yeah, mum had to go back to work. She worked as a nurse, and we know nurses don't earn a lot of money. Very noble work, but very badly paid. So shout out to all the nurses out there. So she didn't have a great income, but she was very mindful with her money. She was quite financially literate. So what that meant is that despite not having a huge salary, she sent 3 kids to semi-private schools, the Catholic kind. She paid off her car, she paid off her house, and last year she retired at the age of 65, owning her own home and having enough super to see out her days. Nothing extraordinary. She's not rich, but she has enough money to look after herself, and I am so freaking proud of her. And, you know, all my career, I've been around money and banking, and I just think it's such an honor to be able to help people with money, because money's like food, something we all deal with every day, and realistically, we kind of need it to survive,
it's like
right?
air.
Yeah. So, but weirdly, we don't learn about it at school, and if you don't learn about it from your parents, you have access to this thing that you don't really know how to use properly. And so, when you do learn, you know, how to understand money, how to make the most of your resources, it creates so many choices for you, so much freedom for you. And I just think that's like the ultimate wealth, is being able to live life on your own terms. And if I can do, you know, one thing to help someone on that journey, or to enable them to take a step further towards financial well-being, I'm like, yippee-ki-yay, let's do this. Because I just love it. And I really want that for people, is to live life on their own terms, because there's nothing worse than feeling trapped by your money situation, not being able to leave a bad job, not being able to live the life you want, being stuck in bad relationships, things that are really real. And another driving thing is that here in Australia, women over 55 are the fastest growing group of experiencing homelessness. And I get shivers every time I hear that, because it honestly breaks my heart. These are women who, you know, they're our mums, or they're our aunties, they're their sisters, or, you know, and they're not like, it's not like they're women that haven't contributed. You know, they have worked jobs, they've raised families, they've, you know, contributed to society, but because of, you know, time out of the workforce, a lack of super fund, the gender pay gap, all sorts of things, not knowing how to invest or what to do, women are more likely to spend money on their families than invest it. And because of that, they're living in poverty in retirement, and that sucks. And it doesn't have to be that way. And so I'm like, I am going to talk to all my girlfriends and tell them all these things and get them investing, just so that they don't become
until
that
they're
statistic.
bored with you.
Until they're bored with me, yes. But then I feed them champagne and they're happy. So yeah.
Okay, you've started investing in the share market. Now, how do you track trades, dividends, distributions, and franking credits, and all those other goodies? Just throw away those clunky spreadsheets with ShareSite. I have my portfolio on ShareSite, and everything is automatically recorded. ShareSite are pleased to extend a special offer to listeners of this podcast. 2 months free on an annual premium plan. Go to sharesite.com/shares for beginners and sign up now for a 7-day free trial. That's sharesite.com/shares for beginners. Okay, so where can people get in touch with you and find out about the events and find out about the work that you're doing?
We are everywhere. So, I mean, there's our website, ladiesfinanceclub.com. We're on Instagram at Ladies Finance Club, and you can also come directly to at Ms. Molly Benjamin, which is my co-founder, or at Ms. Betsy Westcott, that's me. We're on LinkedIn. We're on Facebook. You can find me on Twitter.
What's the Facebook handle?
Ladies Finance Club.
Okay.
Yeah, and we have a group which you can ask to join, and in there it's kind of like a safe space to chat all things money. And yes, there's a couple of blokes in there as well. So, boys, you can also come along.
And how many users? How many people do you have in that group?
Ooh, good question. This is a Molly question. I think it's like 5,000 or something.
Oh, fantastic.
But yeah, don't quote me on that. It's amazing. I feel like every day we're adding new people to the group, and there's conversation going, and it's almost taking a life of its own, and that's kind of the goal with Ladies Finance Club, is that it does take on a life of its own, and that stuff the book club, have a finance club. It's way more rewarding.
Betsy, thank you very much. It's been a real pleasure having you on.
Thank you, Phil. Thank you so much for having us.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation. Thanks to Christopher Soulos for music production with that special Greekalicious flavour. Remember, music always flows, even when the money won't.
Did you know that personal information, like addresses and phone numbers, is collected and sold by data brokers across the internet? Fortunately, Aura steps in, scanning the web, sending you alerts, and requesting the removal of your info when found. Get a 14-day free trial of Aura's full toolkit, including ID theft protection, parental controls, and more at aura.com/safety. That's AURA.com/safety.